today on the Tearsheet Podcast.
Banks, as customers can easily open checking accounts, banks are kind of forced with this dilemma now is how do they recognize a primary account holder? We view it as they have a direct deposit set up and they have 3 or more recurring payments set up at that financial institution as well. So we do feel that our tool is critical for financial institutions to identify their account holders as primary account holders, not just stagnant checking accounts.
Welcome to the Tearsheet Podcast. I'm Tearsheet Editor-in-Chief, Zack Miller. As challenger banks battle over getting new customers, the discussion has moved over the big headline numbers to the quality of those new customers. More specifically, digital banks, but really all banks, are being judged on whether these new account openings turn into customers, whether these new users turn to the bank as their primary financial institution. ClickSwitch helps some of the biggest challenger banks and many traditional banks convert more account openings into new customers. Its technology helps new users easily switch over the direct deposits and bill pay to their new banking relationship. ClickSwitch founder and CEO Cale Johnston joins me on the Tearsheet Podcast. Tearsheet's Embedded Conference is an event that brings together financial institutions, technology players, and other firms from industries outside of finance adopting financial services. It isn't about banks versus non-banks. The Embedded Conference is about collaboration and tapping into the best each player in the ecosystem can offer. The nature of the financial institution is changing. Embedded finance turns every app, software, retailer, and business into a bank, and people are responding in kind. With the uptake of embedded finance, consumers are showing that they want a bank with the brands they love. We've got a star-studded lineup of senior leaders from Goldman Sachs, Marqeta, Galileo, Q2, and so many more presenting on the future of embedded finance. To learn more and register, go to tearsheet.co and click on events in the top navigation.
I'm Cale Johnston. I'm the founder and CEO of ClickSwitch. We are an enablement tool that allows a customer to easily switch their recurring payments and their direct deposits from their old financial institution over to their new financial institution. I founded the company in 2015. To date, we partnered with over 500 financial institutions in the US and Canada who are using ClickSwitch.
Awesome. I have a lot of questions. So, we at Tearsheet, we do follow the challenger bank industry, digital bank industry. And we know that one of the biggest challenges is getting people not just to open a bank account, but to use it as their primary bank account. So I guess getting that direct deposit is one way to define an account as being a primary. This would help to solve that solution, right?
It does. Yeah. It does. So, banks, as customers can easily open checking accounts, banks are kind of forced with this dilemma now is how do they recognize a primary account holder? We view it as they have a direct deposit set up and they have 3 or more recurring payments set up at that financial institution as well. So we do feel that our tool is critical for financial institutions to identify their account holders as primary account holders, not just stagnant checking accounts.
Are there other ways that alternative ways, I guess, that banks are going after that direct deposit? I guess it's just marketing, right?
Yeah, it is. It's marketing. Our tool, when we first started, we tried to provide marketing credits to financial institutions. So if we get into a new territory, we want that financial institution to be able to market that they're offering the easiest solution for a customer to come and open a checking account and get switched over. So if you sign a bank in Florida, we want to be able to provide that financial institution in Florida to go out and promote that they're the easiest financial institution to switch to. It is a good marketing tool for them to be identified as that, and it's kind of helped us scale at the same time to increase our reach with financial institutions that are actually utilizing our product.
So can you take us through the mechanics of how that works from a customer's point of view?
Yeah, so on the front end, we're using aggregation. So we like to identify who the customer is switching away from. So if they're switching away from Wells Fargo, they would enter their Wells Fargo username and password. We then log into that account and we show the customer, here's your employer, and here's how you switch your direct deposit. And then here's 10 auto pays you have set up at Wells Fargo. So we identify, their mortgage, their energy bill, their Netflix. You go down the list, and then the customer just clicks on which payments they want to now be pulled out of their new checking account. So it's aggregation. And then once it hits our system, we have a database on the back end that is actually facilitating that switch with integrations into employers and also merchants. So we need to understand how the employer takes direct deposit change notifications and how the merchant takes ACH payment change notifications.
Interesting. And where does the consumer first interact with ClickSwitch? It's on their new bank's website?
It is. Yep. So we
Okay.
come in right after the account is opened, and then the bank actually enrolls the consumer into ClickSwitch, and then we target that customer to get switched over. We do it a number of different ways. Sometimes we're integrated into their online banking system. So the first time a user logs into online banking, we pop up and say, switching your account to ABC financial institution is easier than ever. Click here and get started. Other times it's more of an in-branch switch, for example. So they walk into a branch, open up a checking account, and then we have trained the bankers and the staff on how to utilize ClickSwitch in that regards.
I love that language that you train them. They need training from what we understand. But
That's our biggest implementation tool is training and educating frontline staff on why this is important and how you need to position us within your onboarding solution.
tell us more about that.
Well, there's a lot of turnover that comes with
Mm-hmm.
frontline staff. And so we constantly are running training sessions throughout the day where financial institutions can pop in and out of and educate their frontline staff on the importance of why they need to use ClickSwitch. It really requires executive buy-in. Like if we just sign a contract with a smaller financial institution, the CEO signs off on it, but it's not communicated to frontline staff, they're just not going to get the users.
Mm-hmm.
So we realize our product is only important if we're driving messaging and positioning with that frontline staff. Sometimes we offer a compensation model to frontline staff. So after their first 30 switches, we'll send them $100 gift card for their efforts, just to get driven in that this is your new process moving forward. That's just what financial institutions find critically important, is it needs to be driven into their process.
Yeah. So interesting that there's that behavioral component. Do you have data that you can share about how efficient ClickSwitch is in getting people to switch?
Yeah, it's a little all over board. So we're working with community banks,
Right.
credit unions. We also work with tier 1 financial institutions. So we're targeting the top 100.
Mm-hmm.
Two of our clients are top 10 in assets. And then we're working with challenger banks as well. The challenger bank and tier 1 model is more successful because it's better tech integration. So we're integrated right into their account opening flow. When we sign a community bank who has less technical resources and ClickSwitch is just a white labeled solution, we see less adoption through that model. So we see more adoption through tighter integrations. We see less adoption, obviously, through the white label approach.
That makes sense. And how, I guess, what's the cycle time in terms of somebody initiating a switch and it getting switched over? Like what kind of time are we talking about?
So the end user experience should take no longer than 5 or 10 minutes to get cycled through. If they work at an employer with 50 or less employees, we typically have to send out a direct deposit change request form and a voided check and follow the rails of their HR system. That could take 1 payroll cycle or 2 payroll cycles to actually get completed. But if you look at a customer that's not using ClickSwitch, it typically takes them about 30 to 60 days to get switched over. ClickSwitch is a 5 or 10 minute interaction that we're having with the end user. And then we facilitate that switch, basically taking the onus away from the end user, and we'll take on that burden and we're going to get you switched over.
Got it. So I understand if you're working for an employer with less than 50 people, but if you're working for a large employer, how long does it take to get switched over?
We've launched ClickSwitch Instant, which is a real-time switching solution by utilizing robotic process automation. So we can identify who the payroll is. So if ADP, for example, is running payroll for their business, the end user can now enter their ADP username and password, hit submit. We then go in and we update their new direct deposit information, so their account number, routing number within that payroll system for a real-time switch. Other way we're doing that is with Fortune 500 companies. Let's say you work at Best Buy, you can enter your Best Buy username and password, hit submit. Or if you work at Uber, you can enter your Uber username and password, hit submit. And we're updating the credentials right within their app or their flow. So our technology has advanced in a way where we're not as focused on forms moving forward. It's more the ability to provide real-time switching, which adds additional business lines for us as far as income verification, employment verification, and so on.
So I want to get into the additional business lines in a sec. I'm just curious about your own sales cycle into a bank. Obviously, it's going to be all over the map, but top 10 versus a community bank versus a challenger, all different. But what does that sales cycle look like, and where do you get pushback? Because it seems like a no-brainer to me.
Yeah. So the pushback essentially is, how do you create an ROI model? We came out of nowhere 5 years ago. This product never existed. So we were really focused on creating an ROI for the financial institution. So we have to come up with metrics. So if a direct deposit and 3 occurring payments are hitting that account, the end user is, 10 times more likely to get an auto loan with their financial institution. They're 25 times more likely to use their credit card or debit card with that financial institution. So it's not just a direct deposit, it's what the downstream effect is as well. So creating that ROI metrics for our financial institutions have been critical in getting us in the front door there. Like I said, we have 500 financial institutions under contract. We sign about 10 to 15 net new banks a month right now. It's kind of just how much can we take on at the current moment. But pricing is critical with us, and continuing to drive that value for the financial institution.
So first touch to closing a financial institution, what are we talking? Months? Are we talking a year? What are we talking?
I'd say our under $1 billion asset market is probably 30 or 60 day closing cycle. Our top 100 is probably 12 months to 18 months closing cycle. A lot of that is they make the business case really quick, but then it goes over to procurement, or it goes to compliance, legal, and they're redlining that contract, and then we agree to it, and then we flip it back, and it takes 2 months to hear back from them. But we can churn out that under $1 billion market a lot faster, a lot more efficiently.
Are you targeting that market?
We are, yeah, pretty aggressively, and we're also targeting the fintech market. So we're working with 4 of the top 6 challenger banks. So we're constantly looking at integrations and providers for those solutions. So if the next challenger bank that gets started, we want ClickSwitch to be part of that MVP, not just an add-on later down the road. So looking at partnerships with the BaaS providers and the underlying banks, that's really our model right now for that fintech market.
So I understood what you were saying, Cale, about like sort of the ROI model for downstream products. Like, is there a way to quantify like what a bank would see, in terms of ROI, general ROI, by moving to ClickSwitch, using ClickSwitch?
Yeah, so you want to look at direct deposit lift. Let's say they're at 20% direct deposit adoption without ClickSwitch, and then they run numbers of using ClickSwitch, and they're at 80% direct deposit margins. We've done case studies that are public with like Notre Dame Federal Credit Union, who we provided a tremendous lift to them right out of the gate of capturing that direct deposit. So we try to provide those case studies from a credit union standpoint, from a community bank standpoint, from a tier 1 standpoint, and a challenger standpoint, so they can really quantify if the product is effective to them or not.
And I guess you can share those case studies that you have, even if they're not public, with prospective clients, because you're seeing that lift, right? Or
yeah,
well, you're on the front end of lift. You don't actually see into lift, do you?
Right. It's hard to pull those numbers from our tier 1 customers because they see ClickSwitch as a competitive difference. So if the number 5 asset bank is using ClickSwitch, the number 7 asset bank is not using ClickSwitch, they don't want us to really use their metrics and go sign the number 7 asset bank. Community banks and credit unions, they tend to play more in the same sandbox, especially in the credit union space. So they're more likely to share that data with us so they can get other credit unions on board to kind of retain those credit union customers.
And how do you guys make money? How do you price ClickSwitch?
So it's a per user fee. On the FI space, it ranges from $20 to $25 a user that uses ClickSwitch. So if they hit submit on a direct deposit, we charge the end user $20. If they hit submit on a direct deposit and 10 auto pays, we charge $20. On the challenger bank space, we're only doing direct deposit. They only seem to be interested in direct deposit right now. So that ranges from $4 to $8, depending on the switch type. So if it's a RPA switch, that's a $4 switch. If they're using a form to get filled out, that's an $8 switch.
Got it. Sorry, who's paying that? The end user or the bank itself, the financial institution?
The bank is paying ClickSwitch. So our model is B2B to C. So our contract is directly with the financial institution, who then pays us when the switch is complete.
Got it. And so I feel like there's more to the story. Like, where does ClickSwitch evolve to? Are you just focused on expanding this, or are there ancillary product lines, ancillary services?
Yeah. So for the last, I'd say 18 months, there's been such a land grab for direct deposits,
Hmm.
and direct deposit's been so important. So it's very important for us to actually enhance our direct deposit automation through RPA. So that solution's been in the works for a long time. We just recently launched it, and we're getting really good feedback for real-time switching. Now that we've morphed into that RPA, it's more of a aggregation model. Okay, so that the underlying tech stack is now built for us to go out and do other unique things. So when you look at small business opens up a checking account with their new financial institution. To now have that small business team be able to utilize ClickSwitch and have that new business, let's say, log into their QuickBooks, and then we can aggregate and pull 2 or 3 years of accounting history, and then we can provide a confidence score to the financial institution. Let's say we pull 3 years of history, they have good cash flow, they're a good customer. We send a 99 confidence score to the financial institution. They can come back and say you're pre-approved for a $250,000 credit line, a $50,000 credit card limit, or we can come back and say there's money laundering here, or whatever the example is, and there's a confidence score of 1. We advise you not to do that. So the tech stack that we built for RPA is going to allow us to get into additional business lines when it comes to validation for community banks and credit unions.
That's really interesting. And the wheels were just churning in my head. Are you thinking about a consumer app and making recommendations for people switching financial institutions, or is that too competitive against your clients?
We are. So that's a
I figured you
natural.
were.
Yeah,
That's
it's a
awesome.
natural line for us. We brought in a new CTO who was at JPMC for 12 years, and then he started his own startup, sold that, and now he's at ClickSwitch. But the guy's just a genius, and he's built out a really impressive product and engineering team. And our next step is to go to a direct-to-consumer model, but also partner with our financial institutions at the same time. So picture a place where a customer goes there, they enter their zip code. We say, here's the top 10 easiest financial institutions to switch to. Click here and open an account and get switched over. That's kind of the vision for that, is to drive consumers to banks that are actually leveraging our technology.
Interesting. And I assume there could be a bid model there where you already know something about that potential customer switching over. And so those banks can determine how much that customer could be worth for them.
Exactly. So let's say
Yeah.
they check a box and they're willing to get their direct deposit switched over, and they're willing to fund their new account with $5,000. That's an account that's probably worth more than somebody who's not willing to set up their direct deposit, or just got an auto loan with a credit union, but that's it. So being able to decipher who's worth more, I think, will be important for our financial institutions.
Yeah, I really like that model. Cale, tell me where you came up with the idea for ClickSwitch.
I was at another startup here in Minneapolis. So we're headquartered in Minneapolis. And in 2011, the startup I was at, we were launching mobile deposit, take a picture of your check. And I was tasked with the go-to-market team to try and sell mobile deposit to these financial institutions. And I was trying to position mobile deposit, and the bank feedback just consistently was the same, where they kept buying technology from their core provider and all these vendors, but they couldn't get customers actually switched over to use it. There was a fundamental issue right after account opening where they just never saw the customer again. So I realized that there was a huge opportunity to get the customer's direct deposit, recurring payments, deliver a sticky checking account, and then that customer will then use all the other products and services this financial institution is offering. There was just a fundamental issue we needed to address right there.
Right. It took COVID to get people to really start using some of these things. They had to. Yeah.
I mean, you look at the account opening industry in Q2, it was up, 70%.
Yeah.
And so how do we leverage that? How do we start partnering with more digital account opening providers? Because if that's the flow of the user, the brick and mortar training and implementation side, it's not as important right now because nobody's going into a branch. So our entire team is now API based. It's digital. We got to get integrated into the digital flow. So we've tried to change our business model over the past few months as well.
I've seen you partner with some of the core providers as well, right?
Yeah, yep. So it's a big model for us to not actually rely on the financial institution staff user to enroll the customer. If we can pull that information directly from the core, auto enroll them. I get all the time, like when people say, what do you do? And I say, I started a company that enables easy account switching. Oh, that's cool. I've been sitting at my bank for 10 years because it's just such a pain in the butt to get switched over. People don't know we actually exist because of the B2B2C model. So being able to get that exposure directly to the end user, let them know a product like ClickSwitch exists, is fundamental for us moving forward.
Interesting. So you got a lot on your plate, and this has been fascinating. What are your biggest priorities over the next, say 6 to 9 months as we look out into 2021 now?
Product, we are trying to create opportunity out of adversity, right? And so when COVID happens and you got to go digital, I've been very product focused with our new tech team, our engineering team. We want all the best developers. We're hiring like crazy right now. We're trying to hammer down on growth. Our client list is there. We just got to enhance our product to kind of fit the mold for the future at ClickSwitch, which is to introduce incremental product lines, which we touched on earlier. If we have 500 financial institutions today using one product, what else can we be cross-selling these financial institutions? Because as you know, FIs hate bringing on new vendors.
Mm-hmm.
The core model worked for so many years and it continues to work is because it's so hard to switch your core. And the core providers constantly looking at M&A and other ways to acquire additional sticky products so that financial institution can never move away from them. That's kind of our outlook moving forward is we should be providing more solutions to our client base.
Got it. Cale, thanks for joining us on the Tearsheet Podcast today.
Yeah, thanks for having me.